We detected an unusual trade worth $1.3 million on Biohaven stock, ticker symbol BHVN. But here's what makes this even more interesting. The stock is trading near its 52-week low. So the big question is, will it recover from here or drop even lower? Technical analysis shows the trend is down, which often continues that way. As many people say, the trend is your friend. But with this key price level acting as support, the stock could just as easily bounce up higher. That's why technical analysis can be so confusing. And that's exactly why we also look at the data to see what wealthy investors are actually doing with their money. So in this video, we'll analyze this unusual option activity to figure out whether this wealthy investor is bullish in buying, expecting the stock to move higher, or bearish in selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, unusual option activity happened on September 17th at 10:09 and 9:48 a.m. for these January 16 options at the 40 strike calls and the 20 strike calls. Two transactions were made for the same options, so we add up the quantities, 2,000 plus 2,000, giving us a total of 4,000 contracts. And these contracts were being traded at the listed option prices, so we can calculate how much this wealthy investor spent. Now, since this trade was executed as a vertical call spread, we'll first need to calculate the net cost per contract. So we have an option price of 4.20 for the 20 strike calls. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. So to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each of these contracts costs $420. Next, we subtract the premium received by selling the 40 strike calls, which was $80, giving us a net cost of $340 per contract. And so when we multiply this by the total number of contracts traded, 4,000, we get a total trade cost of approximately $1.3 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. And if you join the membership through our website instead of YouTube, you'll also receive additional trade alerts by email because YouTube does not share your email address with us. So make sure to join the membership through our website if you want more opportunities to profit. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, even though this trade is higher risk, we still took it because this was still an unusual trade being opened. How did we know these were opening trades and not closing trades? Well, let's check if this wealthy investor is actually opening a new trade and not simply closing a previous trade. Because if a wealthy investor is closing out contracts or trades, it could mean they're worried about that stock. So maybe it's not the right time for us to jump in. On the flip side, if a wealthy investor is opening new contracts, it could signal an opportunity for us to start a new trade. This data is very important to confirm because it strengthens our analysis, increasing our probability of profit. So to do that, let's first see how many open contracts existed before this unusual trade was made. This is the historical data from September 16th, the day before this unusual option activity happened on September 17th. And so, looking at the January 16th options, at the 20 strike calls, the open interest was 791 open contracts. And at the 40 strike calls, there were only 187 open contracts. Now, if those 4,000 contracts that were just traded on September 17th are new opening contracts, then the open interest should be more now, adding to these previously opened contracts. So let's check the updated data now on the option chain for these same January 16th options at the 20 strike calls and the 40 strike calls. And we can see here at the 20 strike calls that the open interest has now jumped to 5,000 open contracts, a significant increase from 700 open contracts previously. And at the 40 strike calls, we have over 4,000 open contracts now, which is also a large increase from the 100 open contracts previously. So this confirms that those 4,000 contracts that were just traded were new opening trades because they were added to the open interest. This is why we always take this extra step to verify the data at a deeper level. Many other websites and scanners simply report every high volume unusual trade without filtering out closing trades, and that often leads to false signals, wrong results, and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, our deeper analysis confirmed it. This was a new trade opened by this wealthy investor, not a closing trade. So now, with that confirmation, we bought these 20 strike calls and got into the same position, marked as POS, which stands for our position. The green color indicates a buy position. And we sold these 40 strike calls and also got into the same position, but the red color means a sell position. Because, based on our deep research across multiple variables and other data sets, this wealthy investor bought these 20 strike calls, but also sold these 40 strike calls, setting up a vertical call spread option strategy for about a price of $340 each, which is the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable, because this trade is going long bullish on Biohaven stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $20, the stock needs to trade above $23 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here, where you can also learn more strategies to increase your profits. Let us know in the comments, do you think Biohaven stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.